All right, we are back for another Q&A session with my preferred lender, Jeff Quincey at Green Home Loans. So if this is your first time watching, the purpose of this recording is to answer any questions that we have received from both buyers and sellers or topics that have come up in our conversations with our clients that I'm sure many other buyers and sellers may have as well. So Jeff, as always, I appreciate your time and knowledge you bring to each of these Q&As. So thanks again for being here.
Thanks for having me back.
Absolutely. So we're going to get started with a quick mortgage market update that we always do with Jeff. So today there was a Fed meeting. What did you gather from that?
Yeah, a lot of the same, right? In fact, and I just did a video on this, so let me see if I get it right. Chairman Powell's exact words were, we have our confidence has grown in the numbers moving in the direction we need to see them, but we need more confidence, meaning more readings. So just understand the voters on the Fed committee. They do what's called a dot plot every month or two, and you've probably heard in the marketplace that we're anticipating rates to come down at the September meeting. And of course, so there was no movement today. There was an outside chance. Everybody was kind of hopeful that maybe they would do that reduction this month, but they won't do it till September. And all of those voters over the last 60 days have updated their level of confidence to the first rate drop happening in September. And lenders are already pricing that in. That's how it works, right? The Fed fund rate, when that drops, not a direct correlation to mortgage rates. There's some indirect correlation. So we've seen rates improve over the last couple of weeks leading up to having this knowledge. A little bit of improvement today after the meeting adjourned and they have the press conference. I think we'll lose most of those gains tomorrow. I think that was a knee-jerk reaction. But the main point here is that rates are slowly moving in the direction we want them to. We already know what to expect in September. The question is, there's no meeting in October. The next meetings are November and December. Can we get 3 rate drops this year, right? September, November, and December. If we do, could be starting 2025 off with some good rates.
Okay, that's good to hear. Yeah, that's what I was hearing also out there is that we should start seeing something happening in September. September is the big month that we're here. It's going to happen. So hopefully, because it's been
just a matter of, do we parlay that? Yeah, do we parlay it into a couple more months of decreases? I still am of the firm belief that we won't see rates come down to those, for people who have already bought, those refinanceable levels somewhere in the 5 to 5.5 range till sometime next summer.
Okay. Okay. Good to know.
It's going to be a slow, gradual process.
Okay. Now let's kind of bring it into our first topic here because it does have to do with just how the market is. And I have conversations recently and I actually overheard at one of my kids' activities that these parents are both buyers and sellers are waiting until after the election to jump into the market. So I'm interested in your perspective on the lending side for this.
I have many thoughts. I'll keep them condensed. So anytime I hear that, I get questions or comments about what somebody's going to do. They're waiting for a rate. It's always followed up by what rate are you waiting for? And most people don't know, right? Same thing, like I'm waiting for the election. What we do as human beings is we pick an event or something that we haven't even correlated a reason behind, and we just use that because it's easy to do. I'm waiting for the elections, and if I follow up, why are you waiting for the elections? Because that's going to dictate where we go. So, Chairman Powell was in front of the Senate and Congress here 2 weeks ago, maybe, and flat out was asked if they make any determination based on political affiliations, right? Republican, Democrat. And his answer was absolutely not. Would we ever make a determination? They are looking at inflation numbers. They're looking at the job force, right, which is weakening. It's showing that it's not as strong, which we've known for a long time. We've been frustrated with the feds that we've known the labor market has weakened, and they're just now starting to use that dialogue. But I do believe that they make decisions based on the data, and that's what they are in position to do. So waiting for the election, if it's the rates are going to improve because of who may be elected or who doesn't win. Yeah, there's some policy decisions there that can be made on a political front that can impact. You can argue one candidate over another might impact financial markets for the next 4 years. you're going to see these mortgage rates change based on the path they're already on, regardless of the election. Could the election results maybe speed it up a little bit? You know, at the end of the day, my second why question, why are you waiting, is, well, because rates are going to get better. You already know, Nicole, we've talked about it on these before. If you're waiting for rates to get better, you're going to pay more for the house, right? We're already seeing it in my video this morning or this earlier today. The Case-Shiller home price index shows in May a 0.3% increase in equity position or in home values over 1 month. So if you extrapolate that out over 12 months, that's 3.6% appreciation when general public believes house prices are dropping, and they're not. They're going up. So they're only going to go up more as rates come down, at least in Arizona, as we talk about the Arizona market.
Yeah, I saw another stat as well. I think that was from the Fed census website, and they had it at a 4% appreciation. And then I went to Cromford and I looked at their appreciation for homes that are under 2,500 square feet. So it's going to pull out the luxury market, because those always have seasonal trends. There for Arizona, for homes under 2,500 square feet, their appreciation rate right now is at 5%. So right there's kind of telling us, you know, things are still going up. And even for history, if you look at the history of home prices through election years, they've never gone down. They've always gone up. They can continue to go up. Sure, we'll see those little dips, but that's a different matter. You know, those, you know, how the market is, whatever, you know, what we're dealing with, and the type of home that's selling. So there's a lot of things that can kind of
a lot of factors.
Exactly.
Yeah.
But yeah, it's kind of it's not you're not going to see a huge issue during the election years, like you're saying. It's more policy.
Yeah, I feel everybody is after one thing, that's lower rates, lower payments, and they're not thinking about, in most cases, the other side. And there's numerous things, not just politics, that play into this, where we've done the numbers 50 different ways, and what happens is, you know, let's say that we go to really low inventory, which I just talked to another agent this morning that said if you talk condos and houses, there's only 14,000 active listings in Maricopa County. So that number gets below 10,000, and that's scary. And you see prices go up just due to lack of inventory. So there's so many other factors in there. But if we just focus on rate, congratulations, you're eventually going to get that lower rate, lower payment. But the payment won't be lower like you think, because it's going to be offset by the higher price point, right? If we're seeing 3 to 5% appreciation right now with rates in the 7s, I mean, we were at 8% last year at one point, you know, for a short period of time. Nobody can predict it, right? But you can't assume that it's going to be anything different or less than 10% appreciation. So if you're looking at a $400,000 house today, next summer, that might be 440, 450. And that difference in price is going to eat up almost everything that you were trying to save with the lower rate. You know, you might come out $50 ahead, but the difference is you paid somebody else 40 grand versus earning that in equity yourself by buying now. So
yeah, I think a lot of buyers, they just really try to time the market, even some sellers, you know, okay, we see that there is not very much competition, not that maybe the best time to jump in. And it's hard to time it. You know, some buyer, I mean, we have a lot of seasonal trends here in Arizona. So sometimes buyers, it's best time to jump in now all the way till the end of December. You know, there's just, you know, less competition out there for them. But I had a listing, that was live for maybe about a week, and we had 46 showings. We had 16 offers, well over asking price, and that's happening right now. And even it's not even a ton, you know, it was in an actual luxury market, but I mean, that's happening now with where interest rates are at, you know. And then you're saying once the interest rates come down, we have this conversation, I think, every single time in our Q&As about interest rates, the demand, the supply, you know, what you're going to see, what you can expect as buyers and sellers. But I think it's important so they realize, you know, once that interest rate comes down, there's going to be a high demand for sure. And I think
lots of petition.
Yeah, absolutely. Did they say where they thought that the rates could possibly come down in September?
They'll do more than likely, and we don't have a way of knowing, more than likely the Fed's never going to do anything more than a 0.25% drop. And that's why we saw mortgage rates improve by about 0.25% with that anticipation. But that's why slow and gradual, because if you start doing that, and let's just say we take FHAV baseline that started at like 6.75%, and we're expecting those to land somewhere around 5, right? So if you do 0.25% decreases, you're assuming 7 of those. Well, if we get 3 at the end of this year, into next year, and we get 4 more, that's kind of how you land at the 5% interest rate. But is it the first 4 meetings of 2025? We don't even know if they're going to do 3 drops at the end of this year. They might just do the one November and maybe one in December, right? So that's where it puts you somewhere in that summer time frame of seeing those rates dropping into the 5 to 5.5% range. But to your point, I had 5 clients write offers this past weekend. And for the last 2 years, I would assume if I sent out a pre-qual to 5 people, we're going to wake up Monday morning with 5 contracts. We had 2, and both of those had to fight to get their offer accepted. The other 3 were beat out by competition. Now, the price point on all of those were between $350 and $450. So there's already more competition in that range than there is at, say, $550, $650. So definitely it's an insight as to what's to come. And it's not going to be fun for people next summer. It's going to be a little bit of deja vu of COVID. Hopefully not to that level.
No, I know. I hope not.